Yo, 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 what is up? Welcome back to Krabs Trades. Hope you guys are doing well. Today we're going to be doing an entire study session on liquidity. What is liquidity? How to use it? Where can you spot it? What times does liquidity show up at? What forms of liquidity is there? Literally everything, as well as we're going to be breaking down my trade from today, which I used liquidity to take this trade. Overall, make sure to watch this video all the way until the end because there's going to be so many gems dropped. And I'm going to be dropping a lot of knowledge that I wish I had back when I started trading. If you guys are new here, make sure to hit that subscribe button as well as hit that like button. It really helps the channel grow. But yeah, all that aside, let's get right into the video. What even is liquidity? Liquidity is basically a pool of orders in the market. Oftentimes it's people's stop losses. So this can be in the form of buy stops or sell stops, as well as limit orders, and oftentimes these will rest above old highs and old lows. I want you guys to think of liquidity as money. Wherever I see liquidity pools, I see money resting there, which I can either take trades off of or I can use it as a target. A very important thing about liquidity is there's very significant liquidity pools that I personally like to use, and that's previous day high and low, as well as session highs and lows. And like I said, we're about to dive in the chart in just 1 second to show all of this. But above and below previous day high and low, there is a ton of liquidity. What is liquidity? It's orders. So there's a ton of orders resting below previous day high and low, as well as session highs and lows. And what does this do? It fuels price to make big ass runs. You can use these very significant liquidity pools here for your bias, as well as just overall, it will help so much to just read the market on a higher time frame kind of point of view. So when you're building out your narrative, you can really keep in mind if previous day high or low got taken, if session liquidity got taken. Also here the sessions, London, Asia, New York AM, lunch as well with the times if you guys need it. But overall, these are super important because when you keep an eye on significant liquidity pools, it will straight up make reading the market so much easier. Also, some other liquidity pools that I like to use are relative equal highs. These are just when highs are close to each other, as well as equal highs and lows. This is when price is exactly equal, as well as low resistance liquidity. This is pretty much trendline liquidity. Oftentimes we will make a run of those stacked highs because there's so many orders just sitting there. Also, we're going to break down all of this in the market in just 1 second. But yeah, just overall, liquidity is money in my eyes. That's how I see it. I see it as money. I see it as orders. And you can take trades off of it as well as use it as a target. And when you really understand how to use liquidity in your trading, it's going to give you such a big edge. So yeah, all this aside, let's get into the actual market and take a look at liquidity. So the first liquidity pool that we're actually going to be going over is previous day high and low. Below and above previous day high and low, like I said before, there's a ton of orders, there's a ton of money. So let's actually take a look at this in live time. Basically have the previous day high and low right now divided using an indicator. If you guys want to grab that indicator, it's right here. It's free. ICT New York Open. When we take out previous day low, we oftentimes will have a huge run higher, right? So you can see right here, if we take a look, swept out previous day low, huge run higher, right? And how can you use this to your advantage? You can take trades off of it, right? So this would really help me with my narrative, as well as when you take out previous day low, we oftentimes will go back up towards previous day high. So this is something very significant that you can use when you're forming your narrative. Let's actually take a look at another example. Let's see. Also, right here, for example, when you have a SMT with previous day high or low, that is very significant because the SMT takes out that liquidity. And as you can see right here, fueling that run lower because above this previous day high, there was a ton of orders. Say that ES took it out, huge run. I like to use SMTs a lot in my trading, but let's take another look. Let's see another example. This literally happens like every single day. It's not the cleanest example every single day, but here's a clean, nice, beautiful example. Took out previous day low. Where did it run? Back up towards previous day high, right? Very simple. And this is something that can really help you with your narrative building, especially if you're struggling with your bias. So this is basically the same for session highs and lows. Let's actually take a look at that right now as well. Also for the session highs and lows, there's an indicator as well that I always recommend that you keep on, especially if you're trading AM session. That is right here, ICT kill zones and pivots. You can see right here, same thing, right? Took out London high, beautiful sweep. Where did we run? Towards London low. This is something that really is significant and it can help you so much with your bias, as well as right here, right? Let's take a look. Took out New York AM low, had a huge reaction up, right? We didn't run up towards New York AM high, but that's just because higher time frame, we were most likely more bearish. And what you can use these session liquidities for is forming your bias, as well as seeing which sessions already got taken out. So say for example, also we have an SMT with it, New York AM low, say we have a SMT, we can also have a beautiful reaction up out of it as well. So the session highs and lows are by far one of the most beautiful things ever. Like right now, you can see very clear draw here. We're drawing up higher towards the London high here, and it looks like most likely we will end up taking out the London high. So you can really use this as a target as well as to use to take trades off of. So if London high gets taken, you can scale down to the lower time frames, look for your entry model for a short. A clear draw on liquidity towards London high here, because we know that there's a lot of orders sitting above this high, right? There's a lot of money, like what we talked about before, and there's a lot of stop losses here. So price is now drawing towards that zone because of how much liquidity is there. And after London high gets taken, we're most likely going to have a bit of a reaction, and if we truly are bullish, we're going to keep pumping, or we could dump. It really depends on the higher time frame narrative as well. But yeah, let's take a look at relative equal highs now. So the way that I use relative equal highs and lows is basically I just look for highs and lows that are near each other, just like this, but they never actually got swept. And you can see this huge run that we're having without taking out any liquidity here pretty much. We just have a ton of stacked orders here above. And when I see these stacked highs, what I see is liquidity here above. Using relative equal highs is a very good target, as well as after it gets taken out, you can see the reaction that we had out of it. Relative equal highs here. I'm looking at this zone here, all of these stacked highs. When we swept this out, look at the reaction lower that we had. Huge reaction out, as well as this could have been used as a target. Say you had some type of entry model down here, you can target those relative equal highs as a beautiful target right there. Let's actually take a look at equal highs and lows. This is oftentimes used as internal liquidity. Now, what does that mean? It means that it's oftentimes used on the lower time frame. I usually see equal highs and lows on either the 5 minute or the 1 minute, usually the 1 minute. And the main thing about equal highs and lows is it basically acts as like a little liquidity pool on the internal time frame. So if we actually take a look, we actually oftentimes have reactions off of equal highs and lows, and you can see right here, we form these equal highs. Also, there's an indicator for this. If you guys want to grab it, it's free as well. Right there, equal highs and lows. Just look it up in the indicators tab. You can see we form the equal lows, or we form the equal highs, swept it out, and then reaction out. And also, you can use equal highs and lows as a target or a spot to move to break even at. Say you're in a short here for some reason. You see the equal lows, you can break even there because you know price could have a reaction there, or you could take profits at the equal lows, because these equal lows here, when price is exactly equal pretty much, let's take a look right here. The way that I see this is I see it as a nice liquidity pool, and on the lower time frame, great spot to break even at, or a great spot to take a partial at, or a great spot to TP at. It's really up to you and your narrative overall, but that's kind of how I use equal highs and lows. Very simple. As well as right here, if we take a look at this is a perfect example of equal highs right there. Boom, resting orders above, right? You can see we literally just wicked it out and then dumped. Also, the main thing about equal highs and lows, if there's equal highs in my stop loss, I will always wait for these equal highs to get swept out first, because that's usually when price will then deliver. And this is oftentimes a reason why a lot of people get stopped out, just wicked out, and price goes straight to their drawn liquidity. It's because there could be equal highs right at your stop loss. And this is a liquidity pool. You would want to wait on that to get wicked out the equal highs, and then you can look for your trade. But yeah, equal highs and lows, very simple liquidity pool. It's something that can also save you from a lot of losses, just like this example right here. Let's get into the last main liquidity pool that I use, which is actually low resistance liquidity. So low resistance liquidity is pretty much just stacked liquidity. So you guys can see these lows right here. I would consider this right here low resistance liquidity. I usually write this, or I draw this up as money, or you could write low resistance liquidity, whatever you want. And you can see that these lows here, right, they never swept each other out. So these lows are just stacked liquidity. You can see right here, even this low is well lower. Right here, I see this all as low resistance liquidity, and people also call it trendline liquidity, because that's pretty much what it is, right? It's a trend line. And a trend line is where a lot of retail traders, they just keep trying to long it pretty much. Like this, for example, say they keep trying to long it. And what that does, it it basically accumulates a lot of stop losses. So there's a ton of orders sitting below the trend line, as well as it's just a liquidity pool in general. Because you got to think of this as everybody's stop losses are below these lows. Usually people have their stop loss at the low, whatever, like this. So I see a low resistance liquidity pool as a ton of people's stop losses, kind of like this. So you can use this as a really good target. See their stop losses pretty much by using low resistance liquidity, and you can see the run that we had lower. There were so many orders sitting here below these stacked lows. If we take a look, let me clean this up. I was just trying to show you guys how like a lot of retail traders, they will be long and their stop losses will always be at the low. You can see the run that we had off of that, right? So say you had some type of entry model here, say you had SMT or whatever, you can use this low resistance liquidity as a really nice target here, because you know that there's a ton of orders here, there's a ton of liquidity here resting below. You can target liquidity as well as break even there, or just target the lowest low of the liquidity pool. Overall, that's basically how I use low resistance liquidity. Very simple. There is also another form of liquidity, which is called imbalances, and those are like unfilled fair value gaps. That's something I'm going to save for the next video, just because I want to go very in-depth on it. By far, some of the most significant liquidity pools are previous day high and lows, as well as session highs and lows. Overall, in trading in general, in my opinion, liquidity is by far one of the most important things, because it can really help you build a solid narrative, as well as just predict price in general. If you made it all the way until the end of this video, comment a W in the chat, as well as if you guys are still a trader that's struggling to get funded, you haven't secured a payout yet, I actually have an offer right now where I guarantee to work with you one-on-one until you're funded over 6 figures with prop firms and until you receive your first ever payout. So if that's something that you're interested in, the link to apply for that is the first link in the description. As well as if you don't get results within 4 months of working with me, I literally send you $1,000 back. So it's literally risk-free on your end, honestly. If you guys enjoyed the video, drop a comment. If you guys are new here, hit that subscribe button. Also comment below what videos you guys want next. What are some concepts you guys are kind of struggling with, and I'll make sure to break them down. Oh, also I low-key forgot to break down the trade, but it was pretty much just a SMT, CISD on the 1 minute, 15-minute gap got rebalanced, just longs back up. I totally forgot to recap this, but I already removed all the drawings. But yeah, this was the trade from today. Basically used low resistance liquidity here as a target as well. Nice low resistance liquidity above. You can see we have these stacked highs here as well. A simple trade, just SMT, 1 minute CISD, break even at the low resistance liquidity, take profit at the highs here. Till next time, I'm gonna catch you guys. Peace out.